Hey, hey, hey. I had a successful week in trading, and I think I'm going to go to Disneyland. An adult ticket is 109 to 159. Children, about the same price. Family of four, $500 plus Pepsis or Cokes for the day. We're talking about $600 or $700 to go for a family of four to Disneyland. I think I'll stay home. I'm wondering if there's a pent-up demand like there is for restaurants. I want to welcome you to the Stock Planner channel. We're about sharing ideas, not offering any advice, just discussing some of the trading topics. We're swing traders, trying to capture these swings, or these major swing would be nice. And this is a zigzag indicator. It's perfect, but it waits. Right now, the zigzag doesn't know what it's doing. Was going up. Now, it may be going down. So, if you're a technical trader and a swing trader, you have to use other indicators. I use the MACD, which is showing down, the stochastic RSI, which is showing down, and the RSI, which is showing down. So what I want to place a trade over the next 2 or 3 months that will capture what I believe is this range for Disney. Trading in this range for quite some time. So I need to do some further investigation. That's the purpose of this video. Let's get started. The Stock Planner is a little on the cheap side, and it likes to use a lot of free tools. One of the free tools is FinViz, and I like it because it puts these nice little lines in there. We had a run up, and then it's been leveling off right here, as I said before in my TradingView chart, which that one's free as well, that charting package. Also have a free Discord. Check it out. Currently trading at 183.47. Target price of 210 according to FinViz. It is shortable and optionable. I like that, and it has a buy rating. It has become profitable this year. Last year it was not profitable, and the future looks very bright. Some growth for the future, and that's a pretty good forward PE. A lot of people like to trade Disney. How about you? Again, trading at 183.47, and TipRanks has it target price of 217. A lot of people follow this, and it's just rated a buy. A 9 on this ranking. Hedge fund activities decreased. We don't like to see that, but the technicals look good. It's only been a few days that the stock has looked like it's downturning, not a trend. Return on equity is a little weak on the fundamentals. Next earning is November 10th. Disney is into a lot of things: amusement parks, movies, streaming services like similar to the Netflix and the AT&T. And that growth in that sector is not going to be that great, because it's been covered by Netflix pretty well. As I said, it just became profitable, and these numbers look to be in the right direction. This article here on September 14th said the stock is stalling a bit, as we've seen in the charts. TipRanks have a free version and a paid version. I use the free version. It's very, very helpful. Get used to it, and I think you'll go ahead and go to the paid version. It does a lot of things and shows you what other analysts are trading. Simply Wall Street has 5 stocks you can analyze each month. That's not going to be enough. The paid version is $10 or $15. I have a paid version. It's only trading at 1.2% below its fair market value, so that's not great. The snowflake, you want to see this to be green. It does have some future growth, as it's showing here. 38.29% earnings. As I said, it became profitable this year. I like Simply Wall Street because of the graphics. But there's no growth in the price. It's stalling. And this is the growth chart. And this is the company on the earnings. That's what you want to see. It's a leader. And this is okay too. Zooming in a little bit on the chart. It seems to top out at 187.50. It ranges to about 175. And this range here. Will it come down to the 50%, or will it go up this way over the next 2 to 3 months? 2 to 3 months out. So these are just lines. No telling what this stock's going to do, but the indicators, the MACD indicator says down. The stochastics has crossed below the 80. It's also crossed below the 20. That could mean it's going up, the stochastic RSI, and the RSI is directionless. I think it's going to be range bound. So if we tried to find something that was below 187.50, And if we could stay below that 187.50 or around that for the next 2 or 3 months and have a winner on our hands, that'd be great. Or you can buy the stock. If you're at a small account, say a $5,000 bank and $5,000 margin, you probably would only want to buy about 10 shares, 10 or 12 shares of this. But I'm shorting it. That's what I'm saying. And by doing an option, you can be up here somewhere. Give yourself a greater odd. Let's see if we can put it together a deal. 187.75. Another free tool is called Option Strat. Yeah, I really am a cheapskate looking for that bargain. Typing in Disney and doing a bear call spread. You have to look this up. Bear call spreads are a short credit. In other words, we'll receive some money. And we're going out to December. And you could look at it in November. Net credit for November or December. This is about a 1-for-1. We like to see that. And as long as it stays below 182, I want to set my range at 8% because I back tested many of these stocks at 8% because I think it's going to peg at 8% sometime during the next 3 months, or peg the other way at 8%, and you need to get out. So you might get out here at 138 or here at 151. It'll peg about half the time and max out at 8%. And you want to try to keep your stop loss at 3% somewhere along here, and you want to try not to get past that. And 3% on this deal is 180. It's going to be 189. And 8% is 168 right here. This is a nice tool because you can kind of plan it out. And you want to keep in this range here as long as you can. And if you want to write it out till December, you'll end up with $260. You want a $500 investment. But like I say, I'm going to be out much earlier, hopefully in October at 150 or 157, somewhere in there, or a loss somewhere in there, 138. So to put this deal on, you have to have $500 bank. Your max loss is going to be $240, and you're going to get your max profit is going to be $260. As long as it stays below 182.60, you have a winner on your hands. Let's go back to the chart. 182.60. Remember that. Need to be down below here. So this thing has to move down over the next 2 or 3 months. And I think it's going to move down to the 50% level over the next 2 months. And if it does that, you have a winner on your hands. Maybe 260 or maybe 180 if it pegs out early at 8%. So what do you think of this trade? Is this enough on a $500 investment? Or would you rather go ahead and take 10 shares and short it at this point right here? I'm banking for a drop. And I could have played with that option strat and did something up in here as well. But you get more money if you kind of move in and do an out of money credit spread instead of in the money. I like to do out of money credit spreads, especially if I give myself 2 or 3 months and I think the movement is going to be in that direction. Give it room to move. Anyway, put your comments below. Is Disney over the next 2 or 3 months going up, or is it going down? Do you have Disney in your portfolio? How are you playing it? Please leave your comments below. Also, like and subscribe. Check out my free Discord. Let's engage, because once you engage, your trading is going to get better, just like mine did, by producing these videos. Right or wrong, guessing or not guessing, my trading and profit has gotten better, and I had a profitable week. Very happy with it. Happy trading. Catch you on the flip. Disney, going short over the next 2 or 3 months.